Welcome back everyone to a new video at Troubles Effects. So today, like I was promising, we're gonna have a webinar. It's gonna be talking about risk management and psychology. Okay, so let's get this started. So first we're gonna be talking about risk management. We're gonna talk about trading and risk management. So what I mean is, when people talk about risk management and trading, they don't really go into depth about it. They just say, oh, just manage risk 1 to 3% on a trade, and that's it. They don't tell you how to do that, where to get the information, and so on and so forth. That's the basic risk management everybody talks about, and they expect you to be a good trader just knowing this stuff. But we're gonna take it a step further. So one of the risk management is sticking with the same lot size. Either you win or lose. Why? So sticking with the same lot size prevents you from, let's say, for example, if you do a one lot size trade and you lose that trade, and your stop loss is 10 pips, so let's stick with that. So the math is very simple. One lot trade, 10 pips stop loss. You'd be like, well, you know what? I'm gonna let the trade hit my stop loss. So you lost $100 right there. Okay, and then because of that you lose confidence. So the next trade you'll be like, you know what? Let me use a smaller lot size, so I lose less. Then you go with the 25-cent lot size. What happens is, if you win the trade, you only won $25. You still $75 back. So that's why it's always better to stick with the same lot size. So like the example he says, trade 1 is a one lot, stop loss of 10, profits of TP of 10 pips also. Win to loss is $100. Like I said before, if you lose the trade, you lost 100. So what happens next? You feel less confident, so you decide to use a small lot size. And that's what you do. When you lose a smaller lot size, 25-cent lot size, 10 pips for loss and 10 pips for a TP. The same trade except for lot difference. Now the win to loss is less. You, instead of gaining that 1% or 100%, you're now making only a quarter of that. So when you lose, stick with the same lot for the next trade. Why? Because if you win the next trade, you can make potentially the same amount and end up the day in a break even, instead of just making $25 and thinking that you won the trade, but in fact you lost. You're still in a losing day. So that's what I always recommend, sticking with the same lot size. Then we're gonna talk about stop loss. Okay, stop loss becomes like before taking a trade, your stop loss should be the first thing you think about. Where you're gonna place your stop loss, why is it gonna be there? Like, you have to have the reasoning behind the stop loss. It's not like, oh, I'm just gonna make a 10 pip or a 15 pip stop loss. That doesn't make sense. What you need to do, look at the trade, look at the setup, think, okay, the trade is going this way, where I'm gonna put, so am I gonna go long, am I gonna go short? If I'm gonna go long, what is the stop loss gonna be? Like, you have to use strategic placements for it. Like, there has to be reasoning. So the risk in 1 to 3 is gonna relate to stop loss for a reason. So now we went through these. Now let's do a small example. So now we see that we have an uptrend, right? So in this uptrend, we can see that we have support, the resistance that became support. Okay, then price went up, so we have the confirmation that we're in buys. Beautiful. So now we're looking for buys. So what do we see next? Now we see the price created. We see the price create another resistance here. You see the wicks? That's an indication that we have resistance. Okay, because look, we had buys going up and then sells coming down, and that's what we call a retracement. When you have a retracement and it closes like this, then you have, and then a bullish candle closes after it, that's an indication that the resistance has been created, or a support has been created in this instance. So now, if you're gonna take a buy on the next candle, where would you put your stop loss? Some people say, oh, I'm gonna put it at 20 pips. Some people say I'd put it at 30 pips. But the good thing is, this is where you should put your stop loss. So where to place the stop loss? The stop loss should be below the candle that you should be trading. In this instance, this is the candle you'll be trading most likely, because you have the two candles that gave you the confirmation that this is a resistance, and if the next candle breaks the highs, you should be fine, and it keeps going up. So your stop loss should be below. Why I wouldn't put it here? Because the candle before has wicked deeper, so I would just put it there for safety. Although you could put it here, it's not a problem, but I would put it there just so that it's in a better placement and it can protect you from a liquidity wick or a liquidity grab, anything, so you get protected and the trade can go and play on. Okay, so that's for the risk management. Like I said, always think about the stop loss first, because that's what's going to be very, very important. If you cannot place your stop loss before thinking about the wins, then it's going to be a problem. Always risk before reward. Why? The smaller the risk, the bigger the reward. If you have 10 pip stop and a 10 pip profit, it's a 1-to-1, right? But if you think about risk management and you manage your risk and you decide, okay, if this trade ends up going the opposite of where I want it to go, and it's not looking good, then I'm gonna decide to close it and like protect my capital. That's the best thing you could do. So you end up closing the trade with less loss, so you're in a very good place. Okay, now we're gonna talk about trading psychology. Trading psychology, there's gonna be a lot to get into, because it's more of a deeper topic that nobody talks about a lot. Okay, so when you come into trading, you have to understand what type of person you are. Are you a calm person? A person that likes to rush things? Like, you have to do a deep dive in yourself and decide, who am I? You know, for me, as I'll talk about myself for now, I don't like to hold trades for long. I learned that by experience. I like to get in, get out, and just enjoy myself. Because if I let's say I take a trade that I wanted to run for 100 pips, for example, I will be stressed out the whole day, and I'll be looking at my phone every time I have a chance. Why? Because I'm gonna be stressed. Oh, is the trade doing good? Is the trade doing this? Is the trade doing that? So what I prefer to do is get in 10-15 pips and out. Then I can go back, chill, and relax. So you have to know what kind of person you are. Are you a patient person? A patient that doesn't have patience? A person that doesn't have patience? Just ask yourself these questions, and what's the best style of trading is for you. Then you have, what are your strengths and weaknesses, which also comes back again to, are you patient or not? Okay, do you get emotionally triggered easy or not? Like, just think about what makes you as a person, as a personality. What are your strengths and weaknesses? This is something you need to look into also. So for me, like I said, my weakness is that I'm not patient at all, especially when it comes to stuff like the trading. I'm not patient. Now I'm getting better with discipline, but before, man, I could not look at the charts for 3-4 hours just to look for one trade. Just for one trade. That could never happen before. Now I have no problems. From 6 to 9, that's my hours. 3 hours. If I don't trade, it's fine. I sit down, look at the charts, I look for the setup that I want to see. If that doesn't happen, it's fine. I end up the day with no trades, and it's cool. It's calm. So that's something you need to look into also. You need to know what are you good at, what are you not good at. Then are you chasing money when you trade, or are you just sitting there looking for a trade to come call you, be like, hey, I'm ready for you. You should take me as a trade. If you're there, look at the charts, be like, oh, I gotta make money, then you're gonna have a big problem. What that's gonna do is that's gonna make you take a lot of trades which you don't want. That's gonna make you take crappy trades which are not good. Instead of taking quality trades, you'll be taking quantity. You'll be like, okay, if I take 10 trades, maybe 1 or 2 or 3 would be profitable. Yeah, but what about the other 7, 8? So you're still gonna end up the day in a bad drawdown. So I would recommend take good trades, take 1 or 2 trades, like my mentor teaches me, 1 to 2 trades, and that's it. Take the good setups, take the quality setups that you have seen before and that worked for you. These are the setups that you need to succeed. For me personally, I have 3 to 4 setups that I look for, and if they're not there, I don't trade. That's it. Like, you don't have to stress about it. Okay, so always don't chase the money. Just sit down on the charts, look for a setup you've seen before that works for you, and take it. Don't worry about the money. The money comes out later. Just focus about it's a process. It's a journey. So don't rush it. Then, are you affected about others' opinion? Because in trading, it's gonna happen a lot. People's gonna say, even if you tell your friends, "Oh, I'm trading," like, okay, how much are you making a day? Oh, I'm just making $1, $2. Oh man, what type of whack is that? That's not trading. That's just wasting time. They're gonna tell you. But that's the thing. Process takes time. If you wanna go, let's say, if you wanna go from New York or from Toronto, Canada, you wanna go to I don't know, Paris, London, somewhere in Europe. It's not gonna be. It's not gonna take you 2 hours. It's gonna take you a few hours to get there. It's a journey. You have to take the time to enjoy it. You have to take it step by step. It's gonna go from education, and then it's gonna go to a demo account, and so on and so forth. It's a process. It takes time. So, if you're gonna be affected by others' people's opinions, man, this trading is gonna be hard. Then, just block them out. Be like, do your thing. Let me do my thing. Don't worry about me. I'll be fine, and that's it. Just focus on what's best for you, and you'll be fine. Now let's talk about expectations. Because when I started trading, oh man, I had my expectations were high. I was like, yeah, I'm gonna be making $100 a day, without even leaving my house. But reality is, reality is a bitch. Let's just say that. Why? Because I started trading. I went through the learning process, and man, when I started getting into the trading, getting into the charts, it was a different beast. Let's just say that. Okay, false expectation. That is something that kills a lot of people. It's like this example. You see, this guy is expecting that he's gonna make it this much, but if you lower your expectation just a little bit, so you aim for something that you could actually achieve, just like this guy, you'll be fine. So let's say that you just started trading and your aim is to make $5 a day. It's possible. I'm not saying no, but why don't you lower it down to maybe 50 cents, $1? It's something very achievable, easy. So that can put less stress on you. You don't need to have the anxiety of, oh, I need to make $5 today. That would lead, because if you have a smaller goal to achieve, and it's an achievable goal, you'll be fine. Instead of making 10 trades just to make $5, you make 1-2 trades to get 50 cents to $1, and you'll be fine. You'll be like, okay, my goal is done, my goal has been achieved, and you'll be fine. Smaller goals, bigger gains. It's a stepping stone. Small, everything adds up, becomes something big. Give yourself time. Like I said before, it's a journey. Give yourself time. Nothing's gonna happen overnight. Nothing's just gonna come off thin air. We're like, oh, I made it. We all wanna make it. You all wanna be somewhere. But give yourself time. It's just, like I said, it's a journey. You go from A to B to C. Then you end up at Z at some point. You just don't come out of A and expect to be at Z in 5 minutes. It's a journey. It takes time. Take steps. So grow on it, enjoy it, and just take your time. Consistency. This is something very, very important. I wasn't consistent when I started. That was probably one of my biggest mistakes. Why? So when I started, I used to draw. So this is how the way I used to trade. Trend lines, zones, patterns. I had the whole shebang, you know. Sometimes things are not meant for you; they just don't work. But for me, I never stick with one specific plan until I got a mentor. You don't need to have a mentor. It's not a necessity, but it's good. Like I said, consistency is a big game changer. The moment you decide on you're gonna do something, stay consistent on it. It's gonna take time. That's why I'm going back to give yourself time again. This and this go hand in hand. Consistency needs time. If you give yourself time, you can be consistent. You know, have a plan, have a few setups that you're gonna work with, and give yourself time. Give yourself a few months, 4 6 months, you know, and see how you grow. Every month, record your results, journalize. This is something we're gonna be talking about later on. You know, be patient. Consistency takes time. Like the big athlete, Ronaldo, Messi, Bolt. These guys didn't just come out of just one day and became who they are. Took them years of practice, days and days and days. You know, that's why they are where they are. And it's just you just have to be consistent. Being under pressure. Are you under pressure when you come to trading? Are you be like, oh, I'm gonna make my mom retire early. I'm gonna pay my mom's mortgage. Like, is there things that are pressuring you into trading? If that's so, you need to stop that. Why? Because that's gonna ruin you. Because that's the thing. When your expectation is like, yes, within 3 months, I'm gonna make my mom retire. That's causing you pressure. That's something you don't want. You know. So just calm down. It's gonna take you a while before you do that. It's gonna take you a few years. So take away the pressure. Become calm, and everything will work out. So let's not have pressure on yourself. That's not something you want. Okay? Then realistic expectation. Like I said, it's more realistic to get 50 cents before you get a $5. So have something realistic. Have some realistic expectations that are achievable, so you don't need to go through the anxiety, the stress, the pressure, you don't have to go through all of that phase, because that's something you don't want at all, because that's gonna ruin you. I'm telling you, it's gonna destroy you. So just have something realistic, some goal that you know that you could achieve in a week. You know, let's say for a week you be like, you know what, I want to make $1 for this week, and try and make it. If you make it the first day, you might lose it the second day, but keep at it. You want to end up the week by Friday at 5. You want to end up that day with $1 gain. That's what you want for the week. You don't have to worry about the trading account. Don't worry about it. If you're on $25 drawdown, it's fine. It's in the past. It's done. Focus about this week. $1 gain on this week. That's what you want. That's your aim. Work on it and see if you can achieve it. It's something realistic. That's it. It's very simple, man. No stress, nothing at all. Now let's talk about trading mentality. Okay. 1 second. I'm just gonna drink water, and we'll keep on going. Okay. Okay, like I was saying, trading mentality. If your mentality is not in the right place, man, trading is gonna be hard. Trading is gonna be a bitch. It's gonna be hard. So, if you have the right mindset, you'll do fine. You'll do amazing things. Strong focus. When you come to the charts, if you're distracted, that's gonna mess with you. What you need to be is very, very disciplined and focused. This is what I'm looking for. If I don't see it, I don't take it. I'm not gonna fall for any of the fake outs, no traps, nothing. One setup, you look at it and you'll focus on getting that one specific setup. If you're on your phone, then like most of the time, and then you're like, oh, I missed my trade. No shit, you missed your trade. You're on your phone. phone down, even if you trade on your phone. Have the MetaTrader open, put the phone on the side, and watch the charts. See what the market is doing. You might get opportunities earlier than you expected. So put the phone down and have a strong focus. Have a strong mental focus on what you should be doing. Discipline. Discipline is very, very, very important. My discipline when I started, man, I didn't have discipline at all. Now, it's a different story. Before I used to, if I don't take a trade, I have to take a trade. I need to take a trade. Now, if I don't take a trade for a week, it's cool, man. It's calm. I'll sit down. Week on without a trade, it's alright. I don't have to. I'm not stressed about it. Why? Because I didn't lose money. Yes, I didn't make money, but at the end of the day, I didn't lose money. So stay disciplined. Like control yourself. Have control. Have discipline, and you'll be fine. Personally, I wake up every day at 5 o'clock. Why? Because I know I have to do analysis for myself and for the Instagram page. Every day at 5 o'clock before everybody else. Wake up, wash my face, do whatever I need to do, open my computer, do the analysis, post it on Instagram so everybody else can see it and use it. And then by that time it's around 6, so by the time I'm done, I take like a good 15 minutes just chilling on my phone, checking social media or not. And then when it's time to work, it's time to work. Everything done, Discipline. That's something makes you strong mindset and setting achievable goals. Like I said before, when you have an achievable goal, your mindset is more likely. You are more likely willing to achieve that goal. Why? Because it's something that you know you could get to. Something that you know you could get to. But when you achieve 100 grand this week, oh come on, you're not gonna make 100 grand when you first started trading. So when you achieve a small goal for $1 or $2, something that you know you could achieve, your psyche, your mindset is gonna be mad. It's gonna be strong, and you tell yourself, yes, I can make it. I can get this. I'm gonna get it. So next week, my goal is gonna be a bit higher. Why? Because I know I got that goal. So instead of $2, I'll aim for I'll aim for $2.50 or $3. So it's always about achievable goals, like something that you know you could achieve. Then always looking for ways to improve. This is something not a lot of people look at. For me personally, this is my favorite. Why? Because every trade I miss, I look at it like, okay, what did I miss? What could I look for? Like there are certain things that you need to look. If you take a winning trade, you're like, okay, how could I have got a better entry? How could I have seen the setup earlier? You be switching from time frame to time frame. You go from the 15 to 30 to the 1 hour, whatever time frames you have to look at. You'll be looking at. You'll be like, okay, what can I do to make this trade, this specific setup, better and easier for me to take next time? You'll do that over and over and over. If you took the trade on the 15, for example, record it on the 15, record it on the 30 minute, record it on the hour, and then compare. Like, okay, this, these are the things that I need to see next time to take the same trade again, but instead of taking it the same exact way, I'll take it in a better way. These are the same things you need to look into. That's one reason that journaling is very important, and we'll be talking about it later, like I said before. Okay, so always look for ways to improve. Doesn't matter, trading wise, psychology wise, emotional wise. Always look for ways to become better. You don't have to be 10 times better. Even if it's 1%, it's still better than where you were. So always look for ways to improve. Risk management. Trading psychology and risk management that go hand in hand. If you risk more, let's say you have a $100 account, okay, and you plan on risking 1%, which is what, $1, I think. $1. Let's say you want to risk 3%, okay, so it's $3. So the amount is a bit bigger, $3. But then you decide, you know what? Screw that. I don't care about risk management. If I have a 10 pip stop loss, I'll be fine. But then your lot size goes out the window. You end up with what, 50 cent, a 10 cent lot. Man, you just screwed up your account right there. Risk management and psyche go, and mentality and psyche go hand in hand. Why? The less you risk, the better it is, the less stressful it is. It's just common sense. Why? Because as people, we get affected by money. If you see money coming out of you, like, oh, money's gone, where did I lose it? So just risk manage, have a reasonable risk management to what you're doing, and you will do fine. Then we have, this is something very, very important, understanding that not two traders are the same. I'm not the same as I was a few months back. That's a fact. I'm not better than somebody that's been trading for years. Like, I cannot compare myself right now to somebody else. That's something very important. Don't worry about what others do. Don't compare yourself to them. Worry about yourself. Compare what you were last week. So see the progress you did last week and see the progress you did this week, and that's something you need to compare. But don't compare yourself to Michael Jackson, who's trading for 50 years, or LeBron James. Worry about yourself. That's it. Stop comparing to other people. Trading mindset. Okay, you might say it's the same, but if you look it up, there's going to be a difference in between. Progress takes time. Like I said, nothing comes overnight. Take time, give yourself time, and enjoy the progress. It's going to be a trip. You're going to laugh at times, you're going to cry at times. It's just the nature of the beast when it comes to trading. So enjoy the progress and give yourself time. No place for negativity. If you come to the market with a negative mindset, oh, here we go, another day, another loss. Screw this. Let's just take whatever trade, lose money. Like, okay, I took one trade today and that's it. This doesn't work. If you're gonna come with a negative mindset every day, might as well just quit trading. Sit down. Having a normal job is fine. Sit down, watch TV, do whatever, instead of just coming to the markets, wasting your time just to say, oh, I traded. So no negativity here. You wanna trade? You have a positive mindset, a strong mindset, a strong focus and a focal point, and you'll be fine. This also can make you or break you. So never come to a chart with a negative mindset. Don't start comparing your successes. Like I said, don't compare your success to somebody else's success. Compare yours to yours. How successful was I last week, and how successful am I this week? That's something you need to compare. But don't compare yourself to someone else. That will destroy you mentally, because you're like, oh man, this guy started after me, and look at him, he's making $100 already, or he's winning trades consistently. Well, you don't know what that guy has been through, but worry about yourself. Like I said, you could ask him questions like, oh, how can I be better? That's something good. But never compare yourself to him, because that's not good. It's just not going to be good for you. And then you cannot allow what's external to affect your internal belief. So what I'm trying to say, you probably know this sentence, you probably know it. So if you believe deep down in yourself that you're gonna be a good trader, don't let somebody else tell you, oh, trading is crap, you're never gonna make money. Don't let somebody like that decide what's best for you. Focus on what you know and what you do best. That's something you should be focusing on. Never let somebody's thoughts, opinions, or beliefs affect what you know and believe for yourself. That's something important, I find. And then just a little something I decided to put in. I don't know if you guys can hear it or not, but if you don't, just put in this last statement and put in Conor McGregor after it, and you'll hear it exactly. So
nothing external can defeat the internal. The only thing that can take someone down or break you down is internal. Nothing external is strong enough. It's just about making sure your internal dialogue and your internal belief in yourself is strong enough that it can withstand the external. The external is there. You've got to accept it. You've got to embrace it. You've got to understand it and be aware of it. But don't let it seep into your internal dialogue.
So, like I said, I don't know if you guys heard it or not, but if you did, great. If you didn't, just look up this statement. You cannot allow what's external to affect the internal belief, and type in after it Conor McGregor and watch it. Just something inspirational, I guess. I wanted to put in emotions. So, you're gonna be like LeBron James, my friend. Over here, he's calm. He's not happy, he's not sad, he's not angry. Calm, quiet. So, emotional control. If you get emotionally, when it comes to trading, man, oh man, you're gonna be in a mad roller coaster, like the Six Flags types. Like you go so high, you come down so low fast. Calm, be calm, chill. Ice. You don't need to be affected by money. If you already accepted the risks, and you accept that you're gonna lose X amount in this specific trade, or you're gonna lose, or whatever money you have, you might lose it. Then there's no need to be emotional about it, because you already know the results. You already know what may happen. So that's something you need to really seep in and have control over, because emotions can make you take a trade, and you could lose the trade. Emotions can make you get out of a winning trade. Something you need to focus on. You don't need to be excited. Excitement ends up making you take over trades. Fear makes you take no trades, or makes you get out of a good trade. You need to be neutral, right in the middle, not happy and not sad, not excited and not angry, not greedy and not fearful. Just right in between. Emotions either break you or make you. I just explained it. It's self-explanatory. I cannot. What I want to say. You get emotional, you're gonna become greedy. You get emotional, you become fearful. So they go hand in hand. Like I said, emotions can make you. The moment you step in on the trading court, and you're on a trading chart, and you look at the chart, your emotions should be out the door. They cannot come in with you, because the moment they do, man, you're gonna be in a ride. You're gonna be on a Six Flag roller coaster, and you'll be having the fun of your life. So you step in the room, you look at the charts, emotions are out. That's it. Yes, emotions can slip in once in a while, it's fine, but your emotions have to be out so you can control everything that happens. Okay, not only to be greedy or fearful, like I said, if your goal, before you took a trade, if your goal is to be 10 pips profit, you go to 10 pips, you're out. You put the money in the bag, you close the bag, you put the bag on your back, and you run out the fucking door. That's simple. You don't need to ask for more. You got what you wanted, you should be happy with what you wanted. Because the more you ask, they're gonna end up taking the whole bag away. So take what you ask and get the fuck out of there. You run like life depends on it. Fear is the same. If you accept that you might lose 10 pips, which could be $1, $10, I don't know, X amount, you have two options at that point. It's either you lose it all, or you cut the loss short. You decide, you know what, when that trade hits 5 pips in drawdown, I am out. I'm closing it, or I'm closing 50%, whichever one you pick. That's something you do. Like I said, stop loss comes before taking the trade itself. Something very important. That's something you need to focus on. Something you need to do. And maybe in the future we'll have more webinars. Maybe we'll talk about it more in depth. Emotions before trading. This is something you need to look into, because I'm not trying to pick on anybody, but people I'm open to people come and talk to me and so on. I give my opinions, but people sometimes come and tell me, oh, I had a bad day, and I was like, you know what, I'm gonna go trade, and they end up blowing accounts. This is something you don't want. Emotions before trading. You always have to ask yourself, how do I feel? Before you open the chart, before you go to the computer, see, how do I feel? Did I have a bad day? Did I have a bad night? Did I break up with my girlfriend? If that happened, don't look at the charts, because you're gonna end up messing up yourself. Stay out. Ask yourself, how do I feel? That's something I encourage people to do. Ask yourself, am I fearful? Am I greedy today? Am I happy or am I sad today? If you're in any of these situations, if you cannot control it and go to a neutral place, then just stay out. If you can, that's good, because that's what you want, that's where you want to be. Okay, then we have, is this the right emotional state I need to be in? Yes. So if you're in a fearful like emotional state, it's not gonna be good. Or like I said, you have to ask yourself, how do I feel? And that's gonna relate to the second point. When you ask yourself and identify which state you are in, and then you go down the ladder, is this the state I need to be in? If you're, let's say, you ask yourself like, okay, I feel sad today, I feel depressed, I feel anxiety, whatever it is this the proper mindset or emotional feeling that I need to be to trade? Is this really what I need to be, where I need to be? If you say yes, man, you're a fool. But if you say no and you acknowledge that and you decide to sit out for that day or that week, mad respects to you, my friend, because that's the thing you should be doing. You should know how you feel, and that will help you become a better trader. How can I be in a proper emotional state? Simple question, simple answer. Let's say you're sad. What makes you happy? Chocolate? Go buy chocolate. Taking a walk? Go take a walk. What? Talking to your girlfriend? Talk to her. Ask yourself, how can you go from one state to the next and be, let's say if you're sad, you want to be happy, right? Because if you're happy, then you could control yourself and be in a neutral place. But if you're depressed, you just cannot come out of there easy. So if you're sad, look for something that can make you happy. Then when you're happy and you're satisfied, happy, go back to your neutral place. When it's like every other day, when it's calm and when it's quiet. Okay? And this is something important that I felt that I need to put in. Trade when you are in the best and optimal mindset and emotional state. Because when your mindset is good, your emotional state is good, then you're almost guaranteed that you could get a winning trade. Don't quote me on this. Don't say, oh, I have both and I lose. Like I said, don't quote me on this, but this is what I advise and this is what I do for myself. If one of these are off, I just sit down and I watch with everybody else. But when both are in the best place, man, I'm in. We are in our role. We're playing games. Okay, so this is something to think about. Always make sure that you have both of them set in the proper place, and you'll do good. Now we're gonna talk about the purpose of journal. Like I said before, people think journal is just crap. I believe that people will be like, man, what? I'm gonna say, oh, I entered the trade at this point, I exit at this point, and that's it. Yes, but it gets more deeper. You don't have to have an actual journal, a physical journal. You could literally just take pictures of the trade and write on it, like I do on my analysis on Instagram. I'll show you some examples later at the end of the slides. Okay, so journal is very important. Why journal is important? Like I said, journal so basically you say you took the trade. Why did you take the trade? Like, did you see the setup you wanted? How did you feel? Did you feel happy, sad, fearful, greedy? Like, you have to identify these things. Why? Because they help you for the future and for the next trades. Okay, so journal is important. You don't have to have a journal. Like I said, you could have literally pictures with information on them, and it should be fine. For me, I have both. I have a paper journal, like I showed you guys last time, and I have my picture journal, which is basically on my Instagram. Everything is there. Then how do I journal? It's very easy. Let's say you took a trade today, okay, on pound JPY, for example. You say, I took a trade. Why did you take the trade? Point 1, point 2, point 3. I saw this setup. I've seen it before. I know how to use it. I know how to use the setup to my advantage. Okay. Now you cover the setup itself. Now the trade. Where did you exit? Where did you enter? Where did you exit? Where's your TP? Where's your stop loss? Things like this. And then you see how the trade play out. Was the winning trade? Was the losing trade? If it was a losing trade, why did you lose it? And did you lose full amounts or did you close partials, and so on? You just keep going up the ladder or down the ladder from broad details to more specific details, and that can help you in the future. Be like, if you see the setup again, you'll be like, okay, I've seen the setup, I have it in my journal, I know how it's gonna play out, and I know what I should do to improve on it. What do I journal? We just covered it, so I don't think I have to go over it again. You can journal emotions, the trade itself. If you want, you could say how your trading day went. Like, if you didn't take a trade, why didn't you take a trade? Like, you have just feel it's your journal. It's specifically meant for you. Nobody's gonna look at it, so you can put anything you want. Forms of journaling. Like I said, the forms of journaling, which is for me, it's two. I have my actual journal, the book where I write stuff, and then I have the pictures where I post my details. Like, okay, I took the trade here, the reason why, I've seen the setup and stuff like that. That's for me. What is the benefit of journaling? We already said the benefit of journaling. If you see something, you know you could see it again and again and again. It's just something that you could. It's like a history notebook, basically. You go back because history repeats itself. You go back and see, like, okay, I've seen this, I've seen this, I've seen this. Next week, you've seen them again. You may not take the trade, but you know, like, okay, I've seen it. Let me journal it again and refer to the first trade. Maybe there's something I could improve on. And you keep doing the process, and that's the way it is. So now I'm going to show you the way I journal. I'm going to show you 3 examples, and there are pretty different, 3 or 4 examples, I believe. So this is the first example. So this was a trade I think I missed. I didn't take the trade for a reason. I was like, because for me, I am with market fluidity. I don't know if you guys know or not. So on the session we have Uncle Ted that usually comes on and talks about how he looks at markets in sections. So he would look at this specific block. He would like, okay, this is the block I want to trade, and that's what I did here, because this is a trade that I missed, I believe. So like you see, I had the note here. So this is a trade I missed, that I know. So like, okay, the reason I missed it because I didn't look on the 4H. I didn't look at this because if you see, candle came down, a candle came up. So effect 1, effect 2. So it mirror each other. Then the effect 3, which is this candle where it mirrored the 2 previous candles. That's something I was looking at. Okay, so that's why I had this. Then this was for the following day. I was like, okay, if we break below here, I need to look for something that I could trade again. So what I did is I looked for effect 1, effect 2, and then effect 3. This is the first, this is the mirror, and that's the mirror of the first 2. So you have the zone. This is where the first candle went, and then this is mirrored, and then this one mirrored the first 2 to fulfill the whole movement. And if you go on lower time frame, you'll see the same here, but it's a wick now on the 4A, so I didn't worry about it too much. So my plan is, the day after, I will mirror the same idea. So you see the 2 wicks, I ignored this. This was gone. This was empty for me visually. There was nothing here. It was just this specific section that I was looking into. Then, like I said, this is again. You have the resistance. You have the support there. Effect 1, effect 2, effect 3, and then I was looking for the mirror effect again to take the trade on that specific candle. So that's one way to journal. For me, this was the first time I've done it, and it's good. It helps me, and I've been using it ever since. Then we have this, a losing trade for me, which is normal, something fine. I took the trade, setup that I've been looking for. It was around 8 a.m. I think, because that's when New York opens, so there's going to be a lot of volume. So I was anticipating, although the support was here, the resistance, I was like anticipating the price would keep moving, which it did. So my analysis is right, which it did. But it didn't work well, and then it says close full price as the price came down to the zone due to Brexit news. So Brexit was there. So I closed positions right there because I didn't want to go all the way down to a stop loss. So that's somewhat of a risk management. So another one, closed 75% as price broke below the previous candle. You see? Yes, it broke below the wick, but I wasn't comfortable. I was like, okay, if it's all the way there, there's a high probability we'll keep dumping down. So that's what I did. I closed 75 and then closed the rest of the trade. Minimum loss, and it's fine. And this is from Thursday, I think it was Thursday, when we had the pound news. So I was looking for sells, and I mentioned it on my Instagram, and then this candle came up, and I just couldn't do anything. This was literally a 5-minute candle. So news came in, price just skyrocketed. So I asked my mentor, like, okay, does this normally happen when there's a pound interest rate? He said yes. So what I did, the headmates was everything was there before. I only added this part. So news candle as pound interest rate remained the same at 0.1%. For future reference, on pound, if pound has interest rate again and remains the same, take the position. Goes, yeah, misspelled it, bullish. Take the position on a buy. Buy it. If it works, it works. If it doesn't, then it just doesn't. But it's something that I've seen, something that I recorded, something I could act upon next time. That's why I'm saying journal is very important. And I think that'll be it. Yeah. So that's it for the lecture. Hope this helps. I hope it's good. Yes, I know it's long. It's around 47 minutes. But I believe it's worth it. I believe it should be beneficial for you guys. And if you guys want to see, if you guys want to see more stuff like this, just drop a comment or just text me on my Instagram, which is on my YouTube page, and it's also in the watermark at the bottom. Just text me, tell me what you guys want to see, and we'll make it work. Thank you, and have a good day and a good weekend.